Hi there, it's Grant here, and in this video what I'm going to do is just run over the basics of buying options and why you're buying a call option. So hopefully by the end of the video you're going to get a basic understanding of how to buy options, why you buy them, so you could potentially go out there and start trading options. Now, a little bit about myself. I'm by no means an options trading expert. I started trading options last year, probably around last spring. And basically I've gone on a learning journey, and basically I just want to, help people out there out with the basics of options, because it can be very intimidating and quite, confusing at times when you're getting into it. But once you understand the basics, you will be off and running. So with that said, let's get on with the video. So basically all an option is an agreement between two people. So you've got a buyer, someone who's going to buy the option, and you're going to have an option seller, so a trader selling an option in the options market. So basically, why would you buy a call option in the first place? So basically when you're buying a call option, you are betting on that stock rising, and that's the only reason why you would buy a call option. Another thing to understand is an options contract controls 100 shares, and just remember that if you buy a call options contract, you have the right but not the obligation to buy the 100 shares that your options contract controls. So there's something called the strike price in an options contract, and all the strike price is the price that you're betting on the stock reaching in your options contract. Something called exercise. So basically when you've got an options contract, say it's in the money, and when I mean it's in the money, it means the stock has gone above the strike price in your options contract. That means you're in the money, you're profitable. So now you can potentially exercise that option, which is the action of converting the options contract into shares of the stock. Also, another thing you must know as well, you do not have to, even if your options contract is in the money, you do not have to actually buy the stock, because, addressing the, big elephant in the room, you might not have the money to buy the stock in the first place. But you can do another thing. You can actually, if your options contract is profitable, it's in the money, it's got above the strike price in your options contract, you can actually sell that options contract for more premium than you paid for it. And I will now cover what premium is. So premium is the price you pay per share to buy an options contract. You can collect premium when premium is the price you pay to buy an options contract. So basically, when you go through an options trade, which I'll show you at the end of the video, you'll see a price next to the options contract you want to buy, and that price is the price you're paying per share. Remember, the price you see in the options tree in your trading window is only the price for one share, so you have to multiply that number by 100 to get the amount that you're going to have to pay to take out the options contract. And like I said previously, you can actually collect premium when selling an options contract. So say you don't want to buy the shares in the options contract. Well, if your options contract is in the money, you can sell that options contract and collect more premium than you paid, so you can actually make a profit on your trade. And that is what the majority of options traders do. And also you've got an expiration date, which is the date when your option expires. So that is really the basics of, sort of call options and options. Right, and here's an example. Say you're looking at a stock. It's currently trading for $100, and you think that the stock is going to rise above $110 by a set date. Say, for example, March 31st. So what you can do is you can buy a call option on that stock. The call option controls 100 shares. And basically the strike that you're going to take out an option is going to be $110. The premium per share to take out the options contract is $2. So effectively, you can control, just one share of this stock. If you were to buy one share, it would cost you $100. You can control one share of this stock for just $2 per share. So for $200, which is going to be the price you're going to pay to take out this call option on this stock, you can control 100 shares for just $200, which gives you massive leverage. If you were to buy 100 shares of this stock at the current trading price, it would be 100 times 100, 100 shares times 100, because it's 100 shares in the options contract. It will cost you £10,000 to, own 100 shares of this stock. But with an options contract, you can control 100 shares for just $200, giving you massive leverage should the market go in your favor. So basically, if, for example, the share, the stock that you're betting on goes above $110, you are in the money. And basically, you're going to be profitable once the share price goes above $112, because remember, to take out this options contract costs you $2 per share. So basically, to make sure you're profitable, the share price is going to have to go above $112, which is your strike price plus the premium per share. And for every $1 increase above $112, the stock price goes, you're going to make $100, because remember, if it goes up to $113, so you've made $1 profit per share, times that by 100, you're in for $110. So say, for example, the stock goes up to 120, you have made yourself, it's going to be 120 minus 112 times 100, which is the number of shares you've got. You're going to make a clean $800 profit. Way to exercise that option and buy the shares, because you're locked in at $110. So you could buy, 100 shares for $110, which would be, off the top of my head, I think that's $11,000. And if you wanted, you could sell those immediately on the open market for $120, which they're trading at. So you can make a clean $800 profit. But obviously, not everyone has got $11,000. But what you could do, as long as your options contract's well within the expiration date, you can flip that options contract and sell it for more premium that you bought it for. So that is basically the basics of call options and why you would buy a call option. Also, when the important thing to know, this is the really the hard bit of sort of options trading, is really knowing which stocks to pick and when the stock is going to move. But one good way or strategy for buying a call option is to buy a call option before a company releases their earnings report. So basically, before the earnings report comes out, there's going to be rumors that company's either had a positive sort of period of trading or a negative period of trading. If they're going to report really strong profits, then the price of that stock's going to go up. If it's going to be poor profits, then the stock price is going to go down. So if you think the price of a stock is going to if you think a company that you're looking at is going to sort of issue a very positive trading update where they're going to release maybe record profits, you could buy a call option on that stock, and basically you could potentially make a nice profit from taking an option on that stock, as long as you can sort of judge the strike price that you think the stock is going to go above. So that is one strategy you can use to take out an options contract. So let me go to my trading window. So I use Tastyworks to trade options. It's probably the number one options trading platform because it's built by options traders for options traders. So what I'm going to do is I'm just going to show you how to basically open a call option. So basically, these are all the different stocks I look at the moment. This is Tesla stock. So down the left here are all the different strike prices you can take out on Tesla stock. So let's open the April 21st, 2023 strike price. And these are all of the different, these. So basically on the left is the calls, on the right are the puts. We're not going to be talking about puts today. We're just going to be looking at buying a call option. So Tesla is currently trading at 203, which is here. So anything this way is basically going to be in the money. So say, for example, you think Tesla is going to go above 210, in the next, before April 21st, 2023. So what you can do is you can buy a call option. So this is the call. So when you buy a call option, you want to sort of pick the premium, which this is the premium here, the price you're going to pay per share. You want to click on that under the ask column. So ask is to buy, bid is to sell. So we just merely click that. So basically this is our order, which is going to appear here. So this is the order we've got. We're buying one contract of the April 21st 210 calls, and we're buying to open. And this is the premium we're going to be paying per share. You want to select the limit type, so the order type to limit. And that is pretty much it. And if I wanted to buy it, I just click review and send. On the next page, it just review how much I'm going to pay. So for this, so this is the price per share. So you're going to be paying $1,935 to open this options contract on the Tesla shares. So buying a call option is as simple as that. So let me show you how to, so let me just clear this. So if you want to clear, just clear that. Sorry, just clear that and your order is clear. So let me show you how to close a trade. So I've got a position open for Apple stock. So if I wanted to close, say if this was profitable and I wanted to collect premium as profit, all I do is just click on this, right click this. If I wanted to close a position, so if I want to collect 100% profit, just go up to 100%, click this button, and basically it would just review the order, and then I can excise it and then collect my premium. So guys, that is all you really need to know about call options. Opening, buying a call option with Tastytrade and then closing your position. Now, as I've said before, the real skill and the trick of knowing how to buy call options is knowing what stocks to buy and knowing when a stock is going to move. Now, doing this on your own can be very intimidating. So my advice is I would strongly advise someone who knows what they're doing. So when I started my options journey last year, I signed up to an options trading service called One Ticker Trader. It's run by Larry Benedict. He's one of the world's leading options trading experts. And through One Ticker Trader, he teaches you his options trading strategy, which is called the One Ticker Retirement Blueprint, but he also gives recommendations on stocks so that you can buy call options and buy put options. So if you want to sign up to Larry Benedict's One Ticker Trader service and get all of his picks, also very importantly, since Larry launched the service last year, he's returned 240% return on all of his options trades, and I think that's across 10 trades. I think he's had 10 straight winners, so he's returned 240% on all his trades for his clients. So you're in really good hands here, and his service is great for beginners because his trades are very easy to place. You just follow what I've done and you can place his trades and you just close them like I show you as well. So if you want to sign up to Larry Benedict's One Ticker Trader service, I'll leave a link in the description. It's just $19 to join for your first year, and you get a 60-day money-back guarantee as well. So if you want to join that, I'll leave a link in the description. Anyway, that's what I've got for you. I hope you found this video useful and informative, and I'll speak to you soon.